Take a look at shares of Meta, down more than 6% today after the EU's privacy regulator said the company cannot run ads based on users' personal data. What will this mean for the stock? Jefferies senior tech analyst Brent Thill joins us now. He's got a buy rating on Meta. Brent, how big of a deal is this?
If it goes through, it's a big deal. I have a hard time believing this would go through. It would be terrible for consumers. It would be terrible for small businesses. Imagine that you go to London and you want to see Metallica as a band, and you get targeted with Taylor Swift concert tickets. If you're going to Wimbledon and you watch tennis and they target you for the cornhole championship down the street, no one wants this. This is, I think, absolutely absurd, and I think it lacks any type of real understanding of what the consumer wants, what's good for the businesses behind this. And again, I think that the likelihood of this going through is low. But if it goes through, it's obviously another blow to the Meta story. I have a hard time believing this goes through.
What was the loophole within GDPR that permitted this to happen and get this far? I mean, was it that contractual obligation notion where it was understood that if consumers had to give up a certain amount of personal information in order to use the platforms?
Yeah, GDPR was a whole nother situation, but I think they've obviously cracked down on content privacy, and I'm a believer in this. But what I'm not a believer in is when you're on the platform, you are consuming as a consumer. You are making a choice, and it gets better if you tell the system what you like. But I don't want to see ads on things I don't care about. And ultimately, if I'm looking at tennis or I'm looking at music, I want to be targeted on the music I like, not some other music they're guessing. And so I think that ultimately, again, if you opt in as a consumer and it's inside the ecosystem of the platform, they're not reselling it to anyone, it's inside their four walls, I have a hard time believing how this is bad for a consumer. I just think from my perspective, I think it hurts small businesses in Europe. They won't be able to advertise. I think it's going to hurt sports. It's going to hurt across the board. And I really don't understand it, to be quite honest. I think, again, it's not final. It's up to Meta to appeal it to if it goes through. This is the tip of this, but I have a hard time believing it's going to go through. And at least the current form it's discussed.
So when you do the back of the envelope sort of calculations, Brent, thinking about, if a significant number of people opt out and don't surrender their personal information, the ads are no longer good. You get a cornhole ad instead of the Wimbledon ad, et cetera, et cetera. Does that equal the down 6.8%, or is a lot of that the huge run up that Meta has had in recent weeks being peeled back?
Yeah, I think it's the pullback of Zuckerberg doing a U-turn on not letting heads go, and then 2 weeks later changing his mind, which was the right call and great decision on his behalf. So I think part of it's the give up. I think part of this is the broader tech drawdown. We continue, our institutional investors obviously are tactically bearish on tech. We've talked about the headwinds moving into the recession that Jefferies is forecasting next year. And again, I think right now tech is just in the penalty box in general, and you saw that across a number of tech names today as well as you did yesterday. We need companies to clear the deck for 23 before investors feel conviction to come back into our group.
Hey, Brent, it's Tim. By the way, Metallica, Meadowlands, August 3rd, 2023, if you want to get involved in that. My question for you is targeting, yeah.
I'm in.
We talk about the dynamic with TikTok, and also just, as traders, we've talked about these headlines and what they could mean for Facebook. Could you talk about and quantify what this could mean from an income perspective? And do you have any thoughts on this, which is also a great regulatory quagmire?
I mean, it's a great question. It's really hard to quantify. One, it's a proposed regulation. Number two, I mean, they haven't responded, and they have the right to appeal. So the what if on this is obviously it's disastrous if it goes through for European advertisers. No European advertiser is going to want to advertise on the platform if that's the case. Again, the end users would leave, but you got to think about the flip side. Is what does this do to their local government, the local community? What does this do for the local shops that are trying to get awareness? You walk outside Wimbledon, and there's amazing restaurants and places to go. Like, do they really want that type of impact? That, hey, I'm watching tennis and I want to go find a restaurant to eat at after? Like, this is, I just don't think they're thinking about this correctly, honestly. And I think, I don't believe that, again, this goes through. I think there's a very low likelihood of this happening. And again, remember, a lot of the regulatory concerns for these internet names have started in Europe, and they've gotten really severe. And ultimately, I think they kind of tend to pass through. Look at GDPR. GDPR really had no impact. Go back to Google's numbers back when GDPR went through, and it really didn't have a huge impact. Clearly, Apple's changes in the privacy side had changes. So this will be a major impact. To what degree? Again, I would put it at major if it really goes through in the current form. But it's really hard to exactly quantify, and I think this is going to take time for this to come through.
Brent, thanks for joining us.
Thank you.
Brent Thill. Dan, how do you think about this?
I just don't think it's that big of a deal. I think he said investors have to clear the deck for estimates for 2023. Yeah. And right now, when you look at it, I mean, estimates are basically flat for earnings and sales after a down year this year, trading about 15 times, very cheap, good balance sheet. We know the drill. They're spending a lot of money, maybe too much money. I think that's that 75% peak to trough decline over the last year was signaling, but it's had a big rally since they last reported, and that was a bad report. There's probably one more bad guide for fiscal 2023, and then the stock is probably a buy.
Yeah, the head of Morgan Stanley's wealth management unit said investors are in for a rude awakening when it comes to the resetting of expectations and estimates for big cap tech.
Without question. I think people are paying attention. They're starting to see it, and that's the last shoe to fall. I think, by the way, that's a great thing. If we finally get these revisions, these stocks selling off, the 5-6 horsemen that's been leading this entire market for the last decade and a half, that will mean we're closer to the end of the beginning, but we're not there yet, Melms.
Yeah, I mean, I think you look at big cap tech earnings, and it's just very clear that they're seeing a diminution in the ad revenue, in all types of revenue that they're trying to generate, and they're recognizing that and having to cut costs. And so until that really cycles through, it's not really investable. On Meta in particular, you could never, ever underestimate the UK or the EU's willingness to stick it to big cap tech. You just cannot underestimate it. And I just don't think it has that much of an impact, right? No one is supposed to be going onto Facebook to get great ads. They're trying to connect with people. And I think it's important to make note, we as the users of Facebook, we're the product, we're not the consumers.